Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and thank you for tuning into our podcast, The Secret War on Cash, where we take an in depth look at some of the various things that are changing around us with our financial system, our banking system, the economy as a whole, domestically as well as globally. And I have actually my co host here, Chris Agelastos, to discuss this with us. And today, Chris, first off, nice to see you. Nice to be back here in Arizona. Says
Yeah,
not many people actually middle of June,
that's
but when
true.
returning from South Carolina, leaving 95 degrees and 95% humidity, I'm not mad at 105 degrees and like 25% humidity. So
Yep.
I think the
That
math on that works out a little better. So,
yeah, look, everybody always says here in Arizona it's a dry heat, and it does get hot, but that dry heat does make a difference. It's not as bad as the temperatures would have you think.
oh, it's no, in South Carolina is absolutely lovely. It's just, I'm sure if I had spent more time there, I'd be more acclimated to it.
Sure.
But I will say it felt like somebody was like smothering me all at one time. So, all right. Anyway, well, today we talk about the economy. We're actually going to take a look at the gold market and talk about what's been happening with gold. You hear it constantly wherever you turn these days, people saying you should, us included, you should diversify into gold. You should be looking at physical gold, and it's a good hedge, and all these various things. We'll call them buzzwords of sorts, or
Mhm.
catchphrases. But to some people, they may not understand that. It may, they hear that, and maybe it makes sense, maybe it does not. They just don't understand what it means. Like, what does it mean to actually be diversified or have it as a hedge? And what does that look like in my retirement account? Or what does that look like in my
Mhm.
investment portfolio? So we have a graphic here for those of you who are listening. You can, at some point later, maybe if you'd like to see it, tap onto the link and watch it through YouTube or one of the other platforms. Um, but here, let's start with this: why people buy physical gold. And the thing is, here as it says on this graphic, Chris, before we talk about the mechanics, let's answer this basic question: why do people buy physical gold at all? And for many
Yep.
investors, gold serves three main purposes. And let's take a look at that. The first one here: wealth preservation. Now, that's a very friendly term, to put it mildly. I mean, if
Mhm.
anyone has wealth of any kind, if you even if you have $5 in your pocket, that's wealth. And if possible, if your options are to preserve that wealth or not preserve that wealth, I think anyone, even as little as that may be, or whatever that amount may be, you want to preserve it as best you can.
Yeah.
And as you look at, what here under the bullet point under wealth preservation, it says gold has historically maintained purchasing power over long periods of time. Okay, so that also sounds good. Maintains purchasing power. To define that a little more specifically, that means, what gold could purchase maybe 50 years ago, you could be confident that, today it's going to purchase the same thing in terms of actual goods. Ideally speaking, which we're living right now, it actually is purchasing more than what it did 50 years ago, even more than it did 10 years ago or 5 years ago. So,
Yeah.
a couple questions for you, Chris. In terms of wealth preservation, number one, you've been doing this for 20 years now.
Mhm.
When you're talking to people, clients or prospective clients, is wealth preservation a very common thing, something that people are looking for? And if so, can you explain a little bit about in their world, what it is they're looking to preserve it for, what kind of preservation they're looking for?
Yeah. So definitely it's a hot topic. It's probably something that 75, 80% of our clients bring up right off the bat, is how is gold going to help protect my money? And for the most part, there's multiple ways that it does, but I think the two biggest ones that we typically think of, one is actual preservation, meaning you're still going to have your money if you hold your physical gold. And in today's day and age, people are a little uneasy sometimes about having all of their money in the banking system. I know over the last couple of years, we've seen multiple bank failures, some instances where people were locked out of being able to get their money. And so I think preservation first and foremost means actually being able to get access to my money. And if you have $100,000 in a checking account and for some reason that bank goes under or there's problems within that bank, it may be days or weeks or even months before you can get access to your money. Whereas if you have your gold in your hands, you actually have ownership of it, and you're holding that metal. Your wealth is in that physical gold. And then the other side of it, which you already touched on, is how gold grows in value and preserves your wealth. Meaning, even if we just go back 5, 6 years ago, right? Look at between COVID and now. It's hard to believe it's already been about 5 to 6 years, but if you look at housing prices pre-COVID and look at housing prices today, they've pretty much doubled in a lot of major markets. Obviously, there's parts of the country that, due to whatever economic things are going on in that area, maybe the home values haven't appreciated. But I know here in Phoenix, it pretty much costs twice as much today to buy the same house that it did 5, 6 years ago. Well, if you had your money in gold 5 or 6 years ago, it's also doubled, maybe even a little more than, right, in
Mhm.
that period of time. So it preserved its purchasing power. So I think those two things are probably the biggest keys to wealth preservation and how gold can help most people.
For sure. Well, and you hit on something there too, where physical gold versus like paper gold. And when I say paper gold, referring to gold stocks,
Yep.
ETFs, or various mining shares or funds, those can be a good play in an investment portfolio. Meaning, when gold performs, you can find that that form of gold will appreciate. Uh,
Right.
the problem with it is that it's not physical gold. And the reason I say the problem with that is that in many instances in the nearly close to 40 years now that I've been doing this, 35, I don't even know what it is now, Chris, what, 20, 34 years now, maybe
Yeah.
34 years. And the bottom line is that over the years, most people who work with an advisor or what have you, when they bring up the concept of owning gold, because advisors don't, most wealth advisors or brokers, they do not deal in physical gold. They deal in the ETFs market, or they deal in mining shares or funds. And so that's the only type of gold they can offer them. That's
Yeah.
fine. You're taking a play on the price activity of gold. However, that is not the same as owning physical gold, where, as a perfect example, we've talked about this numerous times, central banks are not buying ETFs for gold, for their gold ownership. Central banks are not buying mining shares for their gold ownership. They are buying physical
Right.
gold because that is the very core of wealth preservation as it has been for centuries. So on the
Yep.
second point here, and this kind of that what we just talked about here right now leans or bleeds into this, is diversification. For forever now, gold, as I'll read it here, often behaves differently than stocks and bonds, which can help reduce the overall portfolio volatility. And that's
Mhm.
a key point too. And let's just use a gold mining share as an example. If the stock market as a whole gets rattled pretty good, the, a mining share of stock, a gold mining stock, may not be um, insulated or protected from that same selling off, because at the end of the day, you're dealing with a mass exodus if there is any kind of market correction, and that's where gold has served as like the hedge against that type of market volatility. And so, in your experience, Chris, when you're talking to customers about diversification, is this something like they're from like do would they are they familiar with the concept of being truly diversified outside of the stock market and into gold, or is that something that you really have to, take some time and kind of maybe educate them a little bit, or kind of show them a little different perspective on that?
Yeah, I think for a lot of people, because we've all heard the term, if you've been investing at all through a 401k or anything, an IRA over the years, you hear the term diversification. And a lot of times people will come in assuming that they're they're well diversified, and they may be in the sense that they own different stocks, or different areas of the stock market, but oftentimes the bulk of their money is in the stock market. So it may be in different areas of the market, and they may be diversified within the stock market, but for a lot of people outside of maybe owning their own home, they don't have a big investment that is diversified outside of the stock market. And so that's where gold can really come in and help diversify somebody, because not only is it, does it typically perform opposite of big market drops? And when I say that, inevitably, right, there will be days that the stock market, maybe the Dow drops by 5% or something, and gold drops by 0.5% or 1%, and people say, "Oh my gosh, why'd my gold go down?" Well, it was much better protected than the stock market. So it moves typically much less than the big moves we're used to seeing in stock market dips. And then as time goes on, let's say, I remember, 2008, 2010, 2014, we had another good stock market dip. When those big dips happen, gold may be rattled for a couple of days, but then it rebounds and we see, big growth in there as the stock market continues to dip. So those are a couple of different ways that gold can really diversify somebody, in addition to just, again, having the physical metal, as opposed to having something in the banking system or in the investment community. It is an investment. It does have value and wealth, but it's something that you are physically able to hold, rather than just being tied to an electronic investment account, for example.
Right. For sure. That's a really good point. And in my personal experience in talking to customers over the years, a key point that I really try to impart or share with them is that, understand a well diversified portfolio, a portfolio that is truly diversified, let's put it that way.
Hmm.
Not every area of your if you're in different markets, real estate, stocks, bonds, gold, silver, cash, not everything is going to be going up all at the same time.
Right.
That's what true diversification is. At times, that real estate sector or area of your portfolio may be performing better than the stocks and bonds, or vice versa. The gold and silver may be there to perform better than the stocks and bonds, or vice versa. And so, true diversification is not where you pull out your statement and you see, oh, great, everything is going up, blah, 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 blah. But on average, it may be appreciating by 15, 20% as a whole. Something's
Right.
probably going to be dragging it down a little bit, but at the end of the day, that balance, that diversification is what's going to give you what you need to A, take advantage of protection, B, well balanced growth and appreciation, and put you in a position where you're not going to be susceptible to some of those things that may hit the marketplace. Whereas somebody, again, using just stock portfolio, which tends to be a common thing for many people,
Hmm.
if that market as a whole gets hit hard, a lot of people in this country are going to be losing a substantial amount of their wealth. I mean,
Right.
unfortunately, in some cases, depending on the severity of the drop, they could lose half their money overnight. We've seen that before.
We've seen that before. Yeah, for sure.
Correct. So, okay, well, let's get into point three here. And on the third point, waiting for CC to put up our graphic for us. I think he's going to do that. There we go. It stands as an inflation and currency hedge. And I'll read here, when
Hmm.
inflation, let's see, I can't even read it, rises or confidence in fiat currencies decline, gold is often viewed as a store of value. Now, inflation, that's a very sensitive and important word in
Yeah.
today's economy and what we see happening around us. And that's a big reason, not just here in the United States, but around the globe right now, inflationary concerns, which really, in part, is just an easy way of saying that fiat monies are losing money, that the value of
Yeah.
the dollar is going down. And not even just looking at it strictly, Chris, from a value standpoint, but also looking at it from a confidence standpoint. When people, like, the move into gold by banks and institutions right now is more than just where we are in the present, but it's a little more forward thinking, where what they're looking at and what they're seeing and what they're saying here is that we don't have confidence in these fiat currencies moving forward. Therefore, we need to have that balance and that hedge. So
Yeah.
if we look at it on a larger scale with banks and institutions, that we can learn from that. But this is something that the average person, the average investor out there with their retirement accounts or their individual investment accounts, they should be doing as well, correct?
Absolutely. And the way I like to describe inflation, and it's just, a couple different ways to describe the same thing, but people always think of inflation as, well, my costs are going up, prices are going up. But what's really happening is that the value of their currency is going down. So for us, that's the US dollar. And so when I point out, okay, again, around COVID, gold was, gosh, 1800 dollars an ounce, somewhere right around there. Today we're at about $4,500, give or take, per ounce. It's not necessarily that gold has grown in value, even though it has in terms of dollars. What that really means is that it used to take $1,800 to buy an ounce of gold, and now those paper dollars are worth less. They don't buy as much. They don't have as much purchasing power. So now I have to fork over 4,500 of them to buy the same ounce of gold. The gold didn't change. The ounce of gold is the same, 1 ounce coin or bar that it was several years ago. And inherently it's the same material, right? Everything about it is really the same. But I have to give over more dollars now to purchase an ounce. And so for somebody who conversely has had their money or some of their money in gold the last 5 years, now they can cash out that gold coin. And even though their groceries might be costing them twice as much, they're going to get twice as much for that gold coin. And so it protected their purchasing power. And that's how it hedges people against inflation and currency declines.
Gotcha. All right. Well, fantastic. Let's finish on this actually. If CC is going to put up for us, if you've heard this podcast and this has been an area of interest that maybe you wanted to learn a little bit more about, I'd encourage you to visit our website at swissamerica.com. That's all one word, SWISS America.com. And at our website, and you'll see again the link of this in the description. You can open an account; it's free. Create your
Mhm.
own. You create your free Swiss America account, and it's not an account you can use it to purchase if that's ultimately what you're looking to do. But initially speaking, you can open an account where you can have access to a tremendous amount of resources. You can actually have physical materials sent off to you if you prefer that, or you can have electronic copies that you can peruse. But I would strongly encourage you to do that because it's a free account and it'll give you the opportunity or the ability to learn more. Even if it's not something you're ready to do today, it may be tomorrow or the next day or what have you, but you open yourself up for, again, information, which is going to be, I think, invaluable moving forward. So thank you for that,
Yeah.
Chris. And for those of you tuned in, thanks for doing so. If you're not subscribed to our channel, please do that as well. We look forward to talking to you more in the future and have a great rest of your day.